Welcome to Nasdaq Trade Talks. I'm global markets reporter at Nasdaq. Joining me is Phil Mackintosh, chief economist at Nasdaq, to discuss if this week's pullback is healthy for the markets in the longer term. And Phil, it certainly seems that September is taking a very different direction than we saw in August.
Yeah, but it's important to note that really the sell-off was mostly in the tech stocks. So if you look at industrials and a lot of old economy stocks, they didn't rally as fast as the tech stocks since the bottom of the coronavirus sell-off, and they didn't fall as fast this month either. So, everyone's been talking about the valuations of the tech stocks, and obviously whether work from home will be as strong a trend going forward once we've got a vaccine as it has been in the last 6 months, and nobody knows for sure. So I would argue it was probably a bit healthy to have a bit of a pullback and just get everybody to reassess what the new world's going to look like, hopefully when we get a vaccine pretty soon.
Well, Phil, last week we also discussed options activity and how it created the gamma trade. And when you dig deeper into the data, it is quite remarkable what we saw with call buying.
Yeah, I mean, there's been a lot of different data out there just talking about really high levels of options activity, potentially tied to the high levels of retail entering into the market. But there's new news out over the weekend that also SoftBank, one of the big private equity firms, is in the options markets too. So you can see from the data, there's been an increase in single stock option trading. There's been an increase in single stock calls. And so the problem for the market is when you've got a whole lot of calls that a market maker has written, when the market goes up, there's delta that the market maker needs to hedge. And so they will buy the market on those up days. And then when the market goes down, they'll sell the market on the down days. And so that tends to potentially, if it's a big enough trade, exaggerate the ups and the downs that we see. So there's a theory that that might be contributing to some of the, more rapid increases last week in the market on relatively no news, and the rapid sell-off that we saw this week so far as well.
Let's also talk about how we have the V-shaped recovery in the market. Well, we did up until, some volatility this week and the past week, but there's that disconnect again that it's not really reflective of what's happening in the economy. And we're certainly seeing that when it comes to small businesses.
Yeah, I mean, there's plenty of charts that we've looked at that show the V-shape or a pretty steep sort of swoosh, but not all parts of the economy are firing as well as the parts that have been winners, that's for sure. And small business, it's obviously something people are talking about right now with the stimulus bills being held up. And the data that comes out from small business recently is actually showing just how weak a lot of small businesses still are. They've had a relatively weak recovery from their lows. And importantly for employees, the intention to employ extra people is pretty weak as well. So the small business part of the economy hires a lot of people. It's a lot of local shops, and it's definitely not going as well as some of the other bigger parts of the economy that we've seen in the grocery stores, and a lot of retail spending would indicate the economy is in pretty good shape. But there is still data out there that shows that the economy is weaker than we think.
And then, of course, consistent with that is the pullback that we've seen in oil.
Yeah, it's certainly worth watching because a lot of the mobility data shows that people are buying cars, people are traveling in their cars more than they were before, even before the coronavirus sell-off, potentially because they're now driving themselves to work or driving around where they used to catch public transport. But actually, the demand for oil at the moment is not picking up fast enough. And as OPEC and some of the producers are coming back online, having sort of slowed down supply to keep up with the demand, we've actually seen the price of oil start to fall because supply is picking up faster than demand at the moment. So, just another sign that there's not a huge amount of demand coming back to pre-coronavirus levels for energy consumption, and a lot of different parts of the economy aren't doing as well as maybe the top line numbers suggest.
And to wrap up here, of course, we had the vaccine reality check with AstraZeneca's announcement last night.
Yeah, so reading the details of that, it's just one person who had an adverse reaction. So they're testing thousands of people, and hopefully it's just a fluke and it's nothing to do with the vaccine itself. But it's a bit of a reality check, isn't it? Just to think that the doctors have told us, even if you get to phase 3, the chances of all these vaccines being successful is less than 50%. I've seen numbers even lower than that. And we've kind of got our hopes pinned on all these vaccines in stage 3 being successful, being ready to distribute on November 1 or January 1 or whatever the date's going to be. But to know that some of the the vaccines might actually cause some health problems or not actually stop coronavirus from being spread is a bit of a reality check. And it sort of makes you think about when we might be back to work.
All right, Phil, thanks for joining us on Trade Talks.
You're welcome, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.